Hey guys, thank you so much for watching this video. Please give us a call if you guys are looking to improve your credit score, lower your car payment, buy a car, trade in a car. If you're looking to purchase your first home, if you're looking to purchase a rental property, we can help you. Give us a call today, 877-205-7771. Talk to you guys soon, and thanks again.
Hello everyone, this is Calvin Russell, CEO and founder of 850 Club Credit Consultation. Hope everyone's doing well today. Today we're going to talk about how you can qualify for down payment assistance up to 4 units. Let's go straight into it. All right. So number one, the biggest question I may get is why is it only up to 4 units? Well, in most mortgage loans, you can only go up to 4 units, especially with FHA. Okay, so now you can normally go conventional when it goes beyond 4 units, but normally, depending on what state you live in, if you go above 4 units, that's considered to be commercial. Okay, once you go commercial, then you have to get a commercial loan, and that's gonna start to kind of be in that 25% down, sometimes 30% down. But again, every lender is going to be different. You're normally going to be around 20, 25, 30% down once you go commercial. So it's easier, assuming everyone's looking to go residential. Once we purchase our first commercial building, which we will be doing soon, once we do that, then I'll do a video on that. I try my best not to do videos on things that I haven't done myself, okay? So that way I can speak from experience, not just theory, all right? So number one, there's 3 different types of down payment assistance programs. One is going to be what we call local area down payment assistance programs. That means that if you're going to move and be an owner occupant, which owner occupant means that you're going to be living in the property, then that means that you can qualify for down payment assistance programs. Now, every area-based down payment assistance program is a little bit different. Most of them are geared towards owner occupancy, which means that you're going to be living inside the property. When me and my wife bought our first 2-unit building, it could have been a single-family home as well, but they told us that we had to live in the property before selling it for 5 years. Now lenders are telling people that they can live in there for 1 year, okay? Now, if you decide to buy a building and then you have no intentions on living there, that's up to you. But technically, that's mortgage fraud, but again, that's your call. You can talk to your lender about that. But now with that being said, every down payment assistance program that's based on a local area is going to be really based on what you decide to do, based on what the requirements are for that particular area. Like for Chicago, there's a lot of different area-based programs, but at the same time, you have to make a certain income, you have to have a certain credit score, it has to be a certain address, so not every area is going to qualify for that. Some areas that they're trying to rebuild up, in Chicago, they have, of course, the opportunity zones. That doesn't necessarily mean that it's a bad area. That just means that there's an area where they want more homeowners, okay? And majority of those areas just happen to be in those same areas. So, with that being said, now you have that's the first type of down payment assistance program. That's an area-based down payment assistance program. The next type of down payment assistance program is going to be called lender-based down payment assistance. That means that that's based on the lender that you go with. So as a perk for doing business with the lender, sometimes they can give you down payment assistance on top of whatever other down payment assistance that's out there, okay? Same requirements, but not the exact same requirements. It's going to be similar requirements such as credit score. Most lenders are going to want credit scores above 640. Some are going to want 620. Some may even go as low as 600. Now, FHA's minimum requirement is a 580. The problem is there's a lot of red tape if you're trying to buy a mortgage with the 580. Every 20 points is going to make life a lot easier. 580, 600, 620, 640, and beyond is going to make life easier, okay? Everything past 620, the interest rate is going to be about the same, and you're going to get the market rate if you go FHA. If you go conventional, then the rates are going to get better once you get to like around 680, 660, somewhere around there. Don't get confused with approval versus interest rate. Same thing when you're buying a car. Just because you got approved doesn't necessarily mean you got the best interest rates. And sometimes people will bring that same logic into buying a home. You can bring a little bit of that logic, but let me explain what I mean. Let's say, for example, you're buying a car. Your credit's not the best. Let's say you're a 540, right? Sorry guys, I'm coming over a cold. So if you're a 540 and you get approved for the car, more than likely your interest rate is going to be around 23%, 18 to 23% or higher, right? That we know. All right. So now, if you get the same car, let's say if your credit score was a 740 instead of a 540, clearly your interest rate is going to be a lot different. When you're buying a home, it kind of works like that, but that's only if your score is between 580, which is the lowest that they can take, and then, or if there are some now loans, which I'll find out and I'll do a video about if you have no credit score at all. So I'll do a video on that as soon as I get the logistics on that, and I'll probably bring my lender friend on to explain a little bit more of that. Okay, so with that being said, if you're between 580, which is the lowest number that the banks will take, between 580 and 620, that's where your interest rate can be 7%, 6%, 5%, because right now the national average is around about 3.8, 3.7 at the time of doing this video. Interest rates change in the mortgage industry all the time, and y'all favor President Trump. I'm just playing. So, but either way, it really determines what's going on in the, in the economy, in the election process. A lot of different factors affect mortgage rates. But for right now, they're doing pretty good, around about 3.75, 3.8, whatever the numbers are right now. Okay. So with that being said, anything above 620 is not necessarily going to get you a better interest rate. You could be at 820, 720, 620. More than likely, your interest rate is going to be the same if you go with FHA. If you go with conventional, the only difference between interest rates then is that all the interest rates are about the same after 680. So you could be a 850, a 780, or a 680 going conventional. The interest rate is going to be the exact same. Now, if you're a borderline conventional, where some banks may do a conventional loan at 620, but they prefer a 680, that's where that gap is going to be. So the conventional gap, depending on your lender, is going to be between 620 and 680. After 680, all the rates are going to be about the same. Same thing with FHA. 580 to 620, all the rates are going to be the higher ones, but after 620, all the rates are going to be about the same, which is going to be close to what the market is giving. Okay. Hope that wasn't too confusing. Don't worry, I got a home buying course that's going to break all this stuff down. I'm kind of tweaking some stuff, but we're going to release that out pretty soon. You guys are going to love that, especially if you're not locally here. Like the locals, they're spoiled because we have the live home events and all that fun stuff, and we got a lot of people that was at the event that's now getting pre-approved. So we're going to be pretty busy here in the office. So either way, that's going to be your second down payment assistance program, and that's going to be lender-based down payment assistance. You got to find out what the requirements are. They're going to be looking for debt to income. They're going to be looking for regular just income in general, and then of course your credit score. And then of course sometimes they want you to have it could be some other requirements too, but those are going to be the main requirements. The last down payment assistance program, number 3, is going to be, so we did lender-based down payment assistance, we did area-based down payment assistance, and then the next one's going to be state-based down payment assistance. So every state has a different level of down payment assistance they'll give you to be a home buyer. In Georgia, they have the Georgia Dream. In Illinois, they have the IDA grant. And I only know about Georgia because it's, I've been asked so many questions about buying a home in Georgia and things of that sort. So, but either way, there's a lot of different area-based programs, sorry, not area-based, state-based programs. And that you can ask the lender, hey, how do I qualify for that? So for in Illinois, they can give you $7,500, they can give you 10 grand, and then there's a lot of other programs that are out there, but those are the main ones that we have here in Illinois, okay? Now, for how we do it in Illinois, it's technically not free money. They just make money on the interest rate. That's more than likely, that's gonna be the caveat to all these programs. Is it free money that the area is giving us, the bank is giving us, that the state is giving us, or are they raising the interest rate so they can pretty much make their money back? I mean, it makes sense, right? They're giving you a liquid position, they're giving you liquid cash, and it doesn't go directly in your pocket, obviously. It's going to go towards closing, okay? Now, with that being said, if the interest rate is higher, then the question would be, well, Calvin, well, Calvin, well, how do I get out of this situation? Because I have a client who bought a home, and I think it was an area-based down payment assistance program he went through. No, it was his bank. It was a lender-based down payment assistance program, but he could not refinance until after 10 years. So there's a lot of different requirements that you're going to have. Now, why do they have it set up like that? Because they know for a fact that he's going to be stuck with them for 10 years. Now, you're probably thinking, well, why would he want to refinance anyway? A lot of people refinance for different reasons, especially if they met the qualifications to get the down payment assistance, but they didn't get the best interest rate. Or hell, they may want to just move. So there's a lot of different things that kind of go into that. I don't know how that process would be if he wanted to move, but do do ask questions. And please, guys, only ask questions to people that are either in the industry or that own homes, that just bought a house or something like that. A lot of times we're talking to our friends and family, they're not in the home buying industry and they don't own a home. So why are you asking them about home buying? Now, if you just want to just give wrong information, do your thing, okay? But at the same time, you want to talk to people that's in the industry that know exactly what's going on in the industry so you can get the right answers to your questions, okay? So those are the 3 types of down payment assistance programs that are out there that I know of. Anything else that's out there, I mean, I don't know about it, but either way, it doesn't mean just because I don't know it doesn't exist. But you want to make sure that you find out more information about it. And that's lender-based down payment assistance, area-based down payment assistance, and then, of course, you're going to have your state-based down payment assistance, all right? Thank you guys so much for watching this video. If you like it, like it. You want to share it, share it. And as always, be sure to subscribe as we have nothing but the best content on the way. Thank you all so much. Have a great day.